And I would ask, in the meanwhile, Rūdolfs Eņģelis, Sorainen law firm partner, on the stage with me, and to introduce your distinguished panelists.
Thank you, Marius. Hello, everybody, and welcome back after the coffee break, after the exciting networking. So let's talk debt. Let's talk bonds now. And I'm from Sorainen. We are a law firm that's keeping this topic close to our heart, working on many kinds of debt issuances, public, private, secured, unsecured, hybrid, sovereign, corporate. And we've also put together what I think is a very interesting panel for today's discussion about bonds. We have people from the banks, the arrangers, the ones in the trenches. We have representatives from the issuer side. We have a very interesting perspective from bond trustees coming from the Scandinavia. And last but not least, we have a perspective which I would say adds a bit of a fintech twist to our discussion. And by the way, this has been a very intense week for me, and I'm sure for many people in the audience, because many of you know, just 2 days ago in Riga, we held the Latvia FinTech Forum, hosted by Latvia's Bankas. And many of the topics that we heard today were also mentioned there. Capital markets is an important objective going forward for the Latvian financial system, but so is FinTech. And I think this will be another interesting angle to add to our today's discussion by one of the panelists. But without further ado, let me introduce them to you one by one. And I would like to start by welcoming on the stage Ms. Eglė Džiugytė, Head of Markets of Šiauliu Bankas. Šiauliu Bankas has been the leader in bond issuances in the Lithuanian market. And Eglė, as she introduced herself to me when we met a few weeks ago, is someone who lives and breathes markets and is very excited about them on a daily basis. So I think you'll have a lot of good insights, a lot of perspectives to share.
Thank you, Rudolf.
Next, I would like to welcome on the stage Mr. Edmunds Antufjevs, Head of Investment Banking at Signet Bank. And he's been there for 15 years, focusing on all kinds of capital markets projects. And I cannot fail to mention that, the moderator of last year's bond panel in this conference. Third, we have a voice from the issuer's side. And I would like to welcome Mr. Didzis Ādmīdiņš, the CEO of DelfinGroup, the most active bond issuer in the Latvian market. While most of their issues in the past have been what you could describe as privately placed, they recently completed a very successful public offering of bonds as well, and I think Didzis will be able to share his experiences from that. Then we have Mr. Kristofer Nivenius from CSC Global, Head of Capital Markets Nordics of CSC Global. And you may know his company more by its previous brand name, which is Intertrust. Very well-known trustee service providers in the Nordic capital markets. And finally, last but not least, we have Mr. Marius Jurgilas from Lithuania. He's the CEO of Axiology, a fintech company with a very interesting and new business plan, business proposition in an exciting new regulatory area that Marius will talk about a bit more during the panel. But he's a man of many titles. I can say former member of the board of Lietuvos Bankas, but also, listen to this, he's worked in Norges Bank, in the Bank of England. He is the head of the chair of the Science and Studies Committee of the Lithuanian Research Council at the Vilnius University. Well, a man with many hats, but today he will offer perspectives from many of those for us. So let's kick off. And the name of our panel is Retail the New Institutional Investor? So why don't we start with a health check of the Baltic debt capital markets, what they are. And Eglė, I would like you to maybe give your perspective first. What do you see happening in the markets right now?
Sure. I will try to share my insights more on at first from the issuers part, because like the key person when you're talking about issuers and they're like chicken and egg principle, which is more important, I would say that most of them investors and issuers. But from the issuers perspective, 2024 brought a mix of challenges and a mix of opportunities to our capital markets, especially from debt capital markets perspective. And I want to add one, like when you talk about challenges, and the biggest one was especially for those who had to refinance their debts at 2024, and they had to admit the fact that we have a new economical condition and we have a new situation in interest rates. That previously, now we have a very high interest rates environment, and the landscape for issuers is not so friendly from the money-wise perspective. But what's the challenge for issuer is an opportunity for investor. So investors saw that we have a lot of opportunities. We have high interest rates. A lot of different issuers in the market is coming. And the base of investor, especially as you mentioned, retail investors gained a lot of power. And they're increasing the power step by step till now on, and I truly believe that they will continue to do that. So they gain more power, they are more active in bond issues. So due to this, we have a very wide range of different issuers coming to the market. Previously, we had only a couple of players. The lion's part of the game was for financial sector. The game for banks, and the next one, real estate. So the game for two, and they're trying to take the whole market like financial sector and retail issuers. And now when we have this such an active retail investor, we see that more and more companies coming to debt markets. They are considering issuing bonds as an alternative way to finance themselves. And of course, in the Baltic states, banks have their policy due to economy. They try to de-risk their portfolios, so they even more encourage these companies to come to capital markets and to find a way to finance themselves. So what it brought for me, from my perspective, that 2024 brought us a wider range of issuers. They brought more. When you talk about investor base, that our companies can diversify the investors from institutional part and gaining power from retail investors. And they brought us a very interesting perspective that capital markets can be a part of your, especially for small and medium entities, that capital markets can be a very strong partner for finance, and it's a very good alternative to consider. Does it help? Does it not?
Okay, thank you. That's a lot of thoughts to kick off with. Edmund, what is Signet seeing? Is there anything to add to the list that Eglė just mentioned?
Sure. I mean, if you want to have a health check, then definitely I can say truly that the bond market is hot, and by hot I mean the temperature is high, but also it's hot by meaning it really is attractive, both from the institutional and the retail investors, and I think we see a lower activity when it comes to the high-grade bond issues because of the elevated interest rate environment. But if you look at the non-rated like SME type of bonds, I think we're okay. The year is not ended yet, but I think this will be probably the highest activity what we have seen in the Baltics overall, and especially the highest taken account is public offerings, because that's something. I mean, the public offerings it was always in the mix, but like as of now, when you look at the market, you probably think that everybody's doing the public offer, and there are no other ways of doing bonds anymore, which is not.
I wanted to add as well to Edmunds. By the way, Edmunds stated a very good point and very good way to think and look at it, because looking from the public offerings perspective, what can we see? Like a couple of years ago, Edmunds would agree that we have only a couple of them in the market in the Baltic states, not only like country by country. And now, basically every single week or every single 2 weeks, we see a new public offering, and most of them are from these small and medium companies. What does it mean for us as banks, as investors, as institutional retail investors? They are getting more transparent. They are ready to disclose more information. They want to attract more, to increase the investor base. So capital markets is growing and developing like every single week with every single new issue.
So you mentioned public offerings. Maybe this is a good way to segue to the issuer's perspective that Didzis can bring here. So DelfinGroup just completed its first public offering of bonds, and a very successful one at that. Can you tell us a bit more?
But what a great time that we have like new bond issues every like 2 weeks. If you are an investor, it's like pretty great time to be investor and to see these like opportunities all the time. But our issue, yes, it was actually quite successful. Actually, in terms of investors, count of investors, it was like 2.7 thousand investors invested, and that was like second place in terms of investor count in the Baltics this year. Actually quite successful, and our issue was oversubscribed by almost 50%. So yeah, it was quite successful for the company. In the capital markets itself, we are since 2013. So we, for those 11 years, we have been like 13 bond issues. This was the 13, and yeah, quite successful. First public. Looking quite positive forward in capital markets in the next years as well.
Okay. Kristofer, a bit later in our discussion, I'd like to really dive a bit deeper into what's your core experience at CSC and Forma Intertrust, which is the bond trustee concept, something that we've done in the Baltics, but it's relatively still early stages and perhaps underexplored. But for starters, can I ask you, from the Scandinavian side of the Baltic Sea, how does what you're hearing about our markets sound, and what are Nordic investors thinking?
No, but I think that it's pretty much the same. We have had a couple of quite calm years. We had it booming up until 2021. Then the interest rates started to increase. We had the war coming. There was a lot of people were afraid. There were not that many issuances. We had a lot of real estate. Real estate prices fell in Sweden and in Scandinavia. So, but now we're starting to see more and more activity in the market. We have, for example, we are doing a bond right now where we act as trustee. It's one of those senior unsecured bonds for real estate companies. They were very popular up until 2021. Hasn't existed for a couple of years, but they are coming back now. So I think we see more and more risk appetite. We had a issuance for a sawmill the other day, last week, where we issued bonds for them to make an acquisition. So it would be more and more activity in the market. And I think now with interest rates coming down, the Swedish central bank lowered the interest rate with 50 basis points this morning now. So I think we will see more and more activity coming. And secondly, we have also been cleaning up a lot of mess from the last couple of years. We've had a lot of defaults. Personally, I've spent very much time with SAS not on SAS, because I was a little bit, for a while I seemed to be the main enemy of SAS. So I was afraid of getting on an SAS plane, so I was happy to fly Air Baltic here. But it's during their reconstruction, and first the American Chapter 11 and then a Swedish reconstruction, then we have taken an active part together with the investors in coordinating and negotiating with SAS. We have also had various real estate companies that have been in default and due through reconstructions where we have, together with investors, taken over the assets. The most known one is a Swedish company called Oscar Properties. They used to be a builder of luxury apartments in Stockholm, done some fantastic buildings, like real landmark buildings. When that market died out, they became a normal real estate company, which did okay-ish during the lower interest rate, but when the interest rate hiked, their business model wasn't viable anymore. So the bondholders have taken over or sold the assets, sold the properties, and the mother company actually went bankrupt the other week. So that was one of those senior unsecured bonds. So we'll see what that will end up with. Probably not very much for the investors, which is sad. But I think that's a short market outlook where you see where we have it.
Okay. So what we hear so far in the Baltics, perhaps more dominantly in Latvia and Lithuania, it's quite hot. Nordics, a bit more volatile. Marius, you can look at it from both the perspective of former central banker, former financial market supervisor, but also as somebody who wants to build new market infrastructure. So what's your assessment of the health status of the market?
Exciting but cautious. So we heard in this morning, a clear emphasis from current policymakers, celebrating the success in the bond market. But if I can point, neither Signet nor Šiauliu Bankas is a systemically important bank. And the question could be asked, why isn't the current most important institutions jumping on the bandwagon? So there are different opinions in the market. But having said that, so someone needs to do it, and it's great that we have activity in the capital market. And what is the driving cause? I'm going to put my macroeconomist hat. In this region, not only in this region, but across Europe, the result of COVID was quite a bit of excessive liquidity, not only in the non-financial corporate balance sheets, but also in households. And that is the driving cause of a shifting investor base and the interest from what the title of our panel is, retail investors, not only getting interested, but capable. It's very difficult to talk about capital markets to the investor base that has limited capacity to deploy those assets. So that's one thing. On the other side, we have a very interesting, in British sense, situation in the banking sector, where banks are making now de facto excessive profits. And why would they bother accepting more risks from the issuers, which are SMEs? So it's a very kind of situation which is looking for a solution, and that solution is on stage, I guess, here. But to your question, is this, I guess the question is it a sustainable solution? I guess there will be ups and downs. Real estate sector funding in the Nordics shown that there are risks there. It's capital market, and capital market, we need to own our decisions. So financial education, financial literacy is very important, and it's also very important that we not only celebrate the good success and growth and 500 million in Latvia being issued, but also that this is the risky asset class that everyone is buying into. And there's nothing wrong with it, If you want excessive return, you need to take a little bit of risk.
So maybe developing this topic a bit more and coming back to the banks, so you guys are the ones putting together issuances. So how do you see the level of risk? Seems that investors, the retail investors, are after these new papers like hot pies because of the attractive interest rates. So what's the risk awareness, you think, from the investor's side?
Yeah, if I may add, I mean, from the arranger standpoint of view, we like if there is a possibility to mix the investor base with the retail investors. I think it's like the best mix is to have a balance between the institutionals and retailers, because with the retailers, and especially if it's in a household sort of consumer-facing brand and a company, you get a fan base, you get a client loyalty, and it helps in the business. It also helps to push the more aggressive institutional investors down when it comes to the yield expectations, because the retail investors are price takers. So that obviously helps, and it also when the companies are going through, let's say, some restructurings or doing waivers, it's and which is a normal course of business in the changing business environment. With the companies like to have a rational and reachable investor base, which is institutional investors, with whom you can speak and you can speak with maybe 5, 6, 7 investors and get that feeling and convince them to steer the one way or another. With the retail investors, they are unpredictable. You cannot very effectively reach them when you're going through, let's say, some waiver process. So I think the best mix is to have like a best of both worlds. Yeah, so that's from the structuring perspective.
But answering to your question, do they understand the risk? And do they understand what kind of risk they accept when buy the bond? I would say that our retail investors, they are getting more and more educated. And the easiest way to get education is actually to buy something. When you buy something, you are forced to be interested, you are forced to track it, and when you are participating in it with like real money, you have a different kind of motivation. So I'm not saying that they are like in the same line as institutional investors, for sure not. Institutional investors, they put their effort and they work on it every single day. Like most of their lives, and these retail investors are just jumping in, just getting, as you mentioned, from my point of view, I see that they are getting this FOMO mode. They have fear of missing out, that everyone is buzzing, everyone is talking about things, especially about bonds. They want to be in as well, and they just try to jump in. So we as Signet and Šiauliu Bankas, we try to educate our investors as much as possible. We try to participate in every single conference. We try to have talks with them because to realize that high yields means high risk. And this is the way it works. And I have a lot of calls, for example, from retail investors. I love them the most, but I have a lot of calls like, Eglė, can you offer something like with a high yield, but with a low risk? Guys, it doesn't work like this. So we have an actual relationship between risk and yield. So, but after that, I realized that every single call, it brings our investor to know more, to accept the fact that you are not getting the high return without the risk, one thing. Another thing, as Edmunds has mentioned, that we love to see a combination of institutional investors and retail investors. So this is the reason we try to educate them. And these retail investors, for sure, one of the examples, what brings me shivers is that every single issue, and we have them a lot, as Edmunds has mentioned, we have to wait for a last day in order to see what kind of demand we will get from retail investors. because they are kind of hard to prognose. So for sure, for us, it's much easier to bring like 5 institutional investors to close the book, and that's it. To make a deal in a couple of hours, and that's it. But trying to do our our job to educate the market, to widen the range of investors, to make more diversification for issuers and for investors as well, and try to combine them and try to educate them and to try to explain these risks. And as Marius stated, that we are in a very interesting economical cycle where interest rates are still high. Of course, they are decreasing, but they are still high. And a lot of issuers will face some issues as well, like how to handle these high interest rates. And for sure, we will see some ups and downs. But this is markets. You are fully in, and you have to learn by yourself as well. And I still believe that when you're participating in your money, these retail investors, they will get the price of it, and they will learn more and more when they're involved.
So picking up on one of the things that you just said, that it would be easier to just quickly close the deal with a few institutional investors, but retail is much more unpredictable, as Edmund, you said, and it's at the same time they are price takers. You can get the yield down. I guess that's the payoff of doing the heavy lifting with attracting retail to the issuance. So Didzis, coming back to you, I think that's maybe interesting point in the discussion to explore your recent issuance. So how did you decide that this is the time to go for a public offering?
Okay. But also about this fear of missing out, I think one angle how to think about that is that companies, issuers basically, which are offering those bonds, basically are quite mature companies and at quite good level already. And therefore, I think as the governor of Latvia's Bankas said that there is a lot of money for investors, and there maybe is too less for companies where to invest. That's basically, it doesn't work like that. That if there is some company, then it's for 100% will be oversubscribed, and nobody is looking to where to invest. Basically, I think companies is quite good, and we need to like more such companies where to invest. But from my perspective about like retail investors and how we get to that arena, as I said, it was already 13 bond issue. And as like already listed company, we have like almost 10,000 shareholders of our company. And what we wanted to do, we basically wanted to build up bond investor base and add that, because many of investors in Baltic states already know our company quite good, and we saw that is potential base for our bond investors, and that's actually was true, and that's basically one of the reasons why we get such a good traction from retail investors. The other thing what I want to point out is that to be successful bond issuer, what do you basically need? You need a very good track record of the company. We had that. You need actually very good track record of good financial track record, and you need good reason and good strategy how to develop the company and where you will spend those funds. That's basically what's very important for bond perspective, and that we combine those like shareholder base, existing bondholder base, and increase this new existing bondholder base was the reason why we were so successful. That we already had this base.
So it's an interesting example, actually works the other way around from what you would normally expect in the markets. And I think that was what one of the keynote speakers this morning mentioned, that normally you start with a debt issuance and then you sort of prepare yourself and prepare the investor base for a future equity issuance. And you did it the other way around.
Yeah, but for our company, we are as like our main business line is consumer lending, and this is like resources. Those funds are resource for growing the company, and we need actually. For our company, we are combining like three main external resources of funding, which is like P2P lending, bank lending, and bond financing. And we are like combining all those resources and to get like appealing interest rates, bonds at the rate which we need, and to grow credit portfolio and to like develop the company. We are like looking at what's available on the market and combining that together. That's how we are doing that.
Okay, so coming back to the banks now, in the current market environment that we're operating in, high interest rates still, okay, maybe the direction of travel is down, subject to inflation, of course, but we've had 25 bips cuts from the ECB already, so it could be that it improves. Investors are actively seeking any opportunity to buy, if we talk about retail especially. So in this environment, what are the key things to bear in mind for somebody who wants to maybe go to the market for the first time? How to achieve a successful issuance? And also, what are the pitfalls to avoid? So can you speak to that? Maybe Eglė, start with you.
Sure, for sure. What do you need to be successful? This is a very good question. So when you are a new issuer and you want to be successful, you have to bear some things in mind. So what is your target investor? At first you have to think about what is your target investor. Is it institutional or is it a retail investor? As we mentioned, combination for us is the best, and we encourage you to do that this way. So what is your target investor? And it depends what kind of conditions you have to accept or you have to state. So if you want to go to retail investors want to see short-term bonds, short-term obligations, up to 3 years, for up to 3 years, for sure, and they want to see a fixed rate coupon, as high as possible. This is the best selling point. Just set a very high interest rate. For sure, you will raise the full amount. What I love the most, and it's kind of a hint for issuers, I tested it even a couple of times, but what I love the most, when we're talking from the money-wise, price-wise perspective, is to let market to decide your interest rate, your coupon. So just go for auctions, let market to decide and which level they want to settle in. And from my history, from my experience, I say that at the moment, markets they have a lot of intentions and they want to participate basically in every single issue. So for sure, they push down pricing a bit, basically in every single case. So just a small hint, just choose auction. What else it is necessary? Timing is very necessary, very important, because 2025, looking forward, 2025 will bring us a lot of redemptions, a lot of refinancing opportunities. So issuers will fight for your money. This is the key. So when you're planning to issue a new bond or to refinance it in 2025, just have in mind a couple of months. From my point of view, from my perspective, April, June, and October is going to be a feast for investors, and we will see interesting movements then. So a lot of close in above 1 billion euros will be redeemed one way or another. So we will see what's waiting for us around the corner. What else to be successful? When you choose institutional investors, it's a bit different angle. So you have to face their, willingness to offer you some funding for, of course, higher interest rates, higher coupon or yields, and they prefer longer terms. For them to borrow money up to 3 years is kind of not like a waste of time, but for sure it takes too much effort to consider it, so they prefer look forward for at least up to 5 years. So they need bonds from like 3 to 5 or even more years from their perspective. And there's other rules, of course, but this is the reason why I get my salary. So I'm not going to disclose all my secrets how to arrange a very good bond, but a couple of hints I provided. So Edmunds, would you like to add something?
Sure. I think the rule book hasn't changed. Whether it's this year or 5 years ago. Strong financials, good professional management, good story. But when looking from this year's perspective, I think if the company wants to raise funding from the public offering, I think the cheat code is to have a very well-known household name, whether it's a product, as a service that the regular people, regular investors are using, and in a combination with sort of okay-ish financials. So that's like, well, if you want to raise this retail money, if you are okay with a bit of a higher price in terms of the funding, and you know what to do with this money, so it's a good combination. If you want to go that route. But I totally agree about the timeline. But I think looking at the Latvian issue, as I think the 2025 is actually, we are facing some very expected refinancings, because from the very respected companies, and actually investors are it's probably a question, not like it's a question whether even these companies want to do the refi via bonds, or they will go some other routes, and the question is what's the interest rate will be provided, not about whether we will raise the money in order to refinance. And this timeline, I think when you look at the Eurobond market, and specifically if the companies are doing like a 5-year tenor bond, nobody expects the company to refi it in the 4-year, like month before the maturity or 2 months before maturity. The Baltic market has not gone through this yet. We're still getting the refinancing of these smaller SME bonds, maybe 3 months, 2 months before maturity, which is not correct, which is not like prudent, right? And I think we will move slowly towards the regular 2-3 year bond tenor to the maybe 3-4 year tenor, but the investors will look at it not as a 4-year bond, but as 3-year bond, and the company will do the refi during the 4th year, which is a normal thing to do in the Eurobond market. And this is how do you avoid these bottlenecks and traffic jams during the timelines of the refis.
Okay. Kristofer, wanted to dive in a bit in your field, which is the bond trustee experience. So in the Baltics, we still do it relatively rarely, and usually trustees are law firms, although admittedly I don't think that your law firm is exactly the best person for the job, to be honest. So can you describe what's the experience of intertrust in bond trustee situations, and maybe specifically, when does it really matter for a bond issuance, and who does it matter for?
No, thank you very much. No, but I think it is, as you say, I think the most important role, sorry, for us is that I think we are independent. It's we work closely together. You set up a bond, we work closely together with both the issuer and with the law firm that do this. Then you get a second pair of eyes on the documentation and so on, which I think could be beneficial. Lawyers are very good at drafting. We don't draft the documentation. Lawyers are maybe not that practical for you need to live with the bond for a certain number of years. How should you do with reporting? And is this actually doable for the issuer? We are quite good at seeing these practical things. But I think in this situation, it's good, we are good help. But I think when it really matters is that when things do not go as planned. In these situations, well, when things go as planned, I think you can say we are a support to the issuer and to the bank and to the lawyer. We work all together. But when things doesn't go as planned, then of course we change. Then we're 100% on the side of the issuer. Sorry, investors. Yeah. So we work together with the issuers, and there I think our independence comes to play. We could then appoint the best lawyers to work for the investors, so they can get the most money back from the issuance. And I think this situation that you have, where you could appoint a lawyer as a trustee, I find a little bit strange, because then this lawyer would sit and act as trustee. They don't really have the processes for amendments and waivers. They don't really have the processes for how to maintain and preserve collateral during the lifetime of the bonds. These are standard procedures that we have in place. And I think most important, say that there comes a situation we need to maybe go all the way to enforce the security, where we would need a lot of legal assistance. If there was a lawyer that act as trustee, can he or she then act on his own, or would they need to appoint a second lawyer? And I think this could be, like they have this saying, too many cooks spoil the soup. There could be too many parties, and I think cost could go berserk. And I think with us, we are there to control, and then we would, for example, employ Rūdolfs to assist us with the legal work. So we have clear roles and responsibilities, which I think is beneficial for us, and especially for the investors, and in the long run also for the whole market.
Yeah, so I think it's a good point to take away, that there are quite complex procedures that you need to go through at the point when the bond has gone south, and you need to start resolving it, and we don't really have that experience in the Baltics yet. Well, okay, we're running out of time quite soon, and we don't want to keep this audience from the lunch, because that's the easiest way to earn bad scores in the evaluation card. So starting to wrap up slowly, I'd like to, Marius, give you the opportunity to give the final word on the outlook going forward, because we already heard from Eglė a few comments, like beware of the refinancing wall that's coming up. 1 billion next year, April, June, October. Good time for investors.
Too many hints, I just realized.
But for you and your company,
Sure.
What could we expect from you next year?
I mean, future couldn't have been more easier to predict these days. So it's not, right, due to the geopolitical situation and everything. But in the subject of the discussion here, one thing that makes me very comfortable is that what we see in the Baltics, this emergence of a domestic debt market, is not something very specific to the region. It's something that is being pushed across the European Union as well. So bring back retail investor is the mantra that was pushed by the outgoing European Commission, and I'm sure it will be going forward. Very recently, I don't want to date it, but NASDAQ just put out the 10-point action plan on how to build capital market union, and number one point is based on retail investors. So who else, if not NASDAQ, should know better. But having said that, we need some push, not only from the potential new investor base, but from the architecture, maybe some also institutional players joining this. And I'll fall back on an example of how markets have been made, maybe not here in the Baltics yet, but in the Nordics. So the emergence of a very known instrument, covered bond, it didn't appear naturally, right? There was a crisis, banks were in trouble, banks needed to pledge collateral, they had nothing to give to the central bank, and the central bank said, why don't you structure something? And that something came out to be a covered bond, and the market was born, and now the central bank is not participating there, central banks plural, and we have a covered bond market. So sometimes markets need push to appear, and that push could be supervisory push, could be institutions joining together with retail investors. I saw some insights there which I not really agree with. It's not that retail investors will come in and provide lower yield. I think it's quite the opposite. The current new emerging retail investor base, they are hungry for return and they are risk takers. So when you think about the blended finance type of structures, institutions, I believe, will be having the kind of the more secure part, and retail investors, for good or for the bad, they'll be the risk takers.
Okay, well, with that note, retail will be pushed higher on the risk curve in the search for better yields. So I guess we can all conclude with the old market knowledge that let's not invest more than we're willing to lose, because it is capital at risk. At the same time, it sounds like the Baltic markets still have a lot to offer, and next year is going to be interesting for investors, lots of opportunities. And for issuers, beware of the bottleneck or the closing theater door effect. So let's not crowd this way when we go out to lunch. But with that, I'd like to thank our panel, and let's give them a round of applause.